We are clearly in a higher volatility period driven by higher political uncertainty. But what's happening is that trade seems to be ramping up at a time when the underlying economy, both in the U.S. and globally, is a little bit more fragile than what we thought maybe in the first quarter. So we have this divide between what we're seeing in manufacturing and services. I would say the ISM manufacturing survey is very important to watch. If you look at the export sub-index as a leading indicator of that, it would suggest that we're going to be moving into contraction territory in coming months. But we got the ISM services today at a very strong reading, about 57, which is consistent with GDP growth around 2%. So what do you do with that? And I think that's what we're seeing with this back and forth in the market. The question is, Friday's labor market report will be a sign of how the consumer is doing. That's been one of the strong pillars that the economy is standing on.
Leisman, you had Evans yesterday. You got Brainerd today. Now the market seems to be pricing in 3 rate cuts by early in 2020. You tell me,
no,
because
it's December, Scott.
By December, okay, so even by the end of this year. So you tell me, you talk to these folks all the time, both on the record and off. Is the market offsides on its hopes for a rate cut as early as 2 weeks from today?
So the sense I got at the conference was the market may not be wrong in forecasting a rate cut. And that would come in the event of a weakening of the economy and probably an insurance cut if these Mexican tariffs go into place. And I think if you got a big downdraft in the markets. The other sense I got was that the market is very aggressive in pricing in 3 rate cuts. I don't think the Fed is there. I don't think the Fed has a sense that that's what the economy needs. I think that there's some insurance or buttressing against downside risks, but I don't think there's a sense that the economy needs a whole lot of help. And I think Meghan said it earlier that the services survey was pretty good. Look, the ADP has another side to the story here, which is that you had 271,000 in the month of March, 27,000 in the month of April. You're running about 150,000 average, so that's not too bad. If you get a 2% economy, I think you can get 1 cut out of it, maybe another one, but I don't think you get 3, and I think 2 is a stretch right now, from what I'm hearing.
So then you're telling me, don't worry, market, the Fed's going to cut. However, maybe not as many times as you think.
Yeah, I'm not saying don't worry, market, because I don't think what the Fed is going to do is going to be necessarily enough if those Mexican tariffs go into place, if you have abiding uncertainty among corporate CEOs about investment and about hiring decisions. I'm not sure Fed rate cuts are a perfect offset for tariffs on Mexico and increased tariffs on China. I think they are an offset. So I would say, I'm not going to say don't worry, market, because I think there are major profit implications that those guys and ladies around the desk are better at figuring out than I am. But I can tell you from a macro standpoint, you can get some Fed rate cuts right now, but you can't necessarily get 3 or a whole hog rate cut scenario in the absence of pretty major weakness.
All right, so Michael Farr, can you have another sustained rally in the stock market without the Fed cutting rates?
No, I don't think so. No, I think that the Fed, if the Fed doesn't cut rates, I think the slowing economy and slowing GDP with the extra political headline pressure, and particularly if these sort of one-off tariffs were to go into effect, no, I think the market would be probably very much sideways and probably lower. But that isn't happening. We've seen the market be really volatile along with some political headlines. I think the Fed's blinked. I think Jay Powell probably has made his second mistake in his Fed leadership here. The first being when he said, we're nowhere near neutral last fall and the market freaked out. I think that he sort of came forward and said, we've got your back, market. I think that probably is a mistake, a little bit premature. Certainly stocks like it. And when the Fed guy has your back, you've got to own stocks.